equities to the debt market. India's bond prices have crashed and yields on the 10-year sovereign bonds have surged to the highest level in almost 2 years. Latha Venkatesh joins us with more on what the bond market churn and how it was caused. Latha, a lot of it has to do with what Deputy Governor Veeralacharya said to the investors yesterday.
Well, the yield rise was a bit of a shock, and I mean, the yields yesterday when we went to bed, the new 10-year was at about 7.26. Today, 7.37. The old 10-year paper was at 7.46. Now at 7.55. So this is an 11 basis point yield increase. That would mean the price of those bonds have fallen by over a rupee. It's a very unusual move, considering that we did not get any inflation data or anything yesterday. The reason is what you can see on your screen. The Reserve Bank Deputy Governor Veeralacharya delivered a hard-hitting speech to the FIMDA, the Organization of Money Market Dealers Association, which had invited him. His message is that banks are not managing their interest rate risk. He was making this comment in the back of banks having approached the Reserve Bank to give them a one-quarter dispensation to not mark-to-market the bond losses. Banks' argument is that they did not expect the yield rise from October to December. It was a very sharp rise in yields and fall in bond prices. Can they be excused for one quarter, not mark their bonds to market because this was quite unexpected? Veeralacharya's speech was that he pointed out to several episodes in 2004, in 2008 to 13, and more recently during the taper tantrum time, when yields have risen sharply. He pointed to the banks that they are holding long tenor bonds and not hedging that risk in the OIS market. The overnight interest rate swaps market is 85% dominated by foreign banks, although they have only 5% of the total lending in the system. And he was wondering, his argument is very telling. The title is Heads I Win, Tails the Regulator Dispenses. He says this is the attitude of the banks. Every time there are bond gains, they keep it. When there are bond losses, they go to the regulator and say, please excuse us from mark to market. And he wants to stop that. The speech has had a very bad impact on the nerves of the market. And today there is a desire not to buy bonds at all. And that's why, this is a lack of buying rather than active selling that has led to a fall in bond prices. We spoke to experts. The expectation is that this is it. It will not fall further. But the real acid test will be in the coming weeks, this Friday and next Friday, when large amount of government bonds are going to be auctioned. One will have to see the appetite.